Interesting conversation with Tata Consumer Products. Well, the company came out with its earnings. It's been a mixed quarter, good revenue and PAT growth, but margins have taken a significant hit. And to discuss as to how the quarter has gone by and what the future is looking like for the company, we're joined by Sunil D'Souza, Managing Director and CEO of Tata Consumer Products, joining us now. Mr. D'Souza, always a pleasure speaking with you. First of all, I'll take this up with you, congratulating, because it's been a mixed quarter, but you've managed to grow in terms of PAT overall. In terms of your overall outlook, because I was trying to understand that you've said in your con call that margins will recover, in the second half of this FY26. Just want to get a sense of what has worked and what has not worked according to you this quarter.
Yeah, so before I get into this quarter specific, as you rightly said, we had a double-digit top line, 10% growth, which is what we've always guided for. EBITDA was negative, 8%, and I'll come to that. Group net profit was up by 15%, and we're sitting on 400 crores of cash, right? The EBITDA was negative primarily, if I take it for the same quarter last year, we were down by 250 bips. Now, out of the 250 bips, 160 bips is accounted for by the tea cost, right? Last year, tea prices went up by roughly 30%. And we've been able to pass on to the consumer only 70% of it because in various pockets or various segments, to remain competitive, we did not move prices. That said, what we are seeing this year, and last year, the reason why the tea prices went up is because there were roughly 3 droughts through the year, and that impacted the total tea crop, which was down by roughly around 5%, and the tea prices shot up. This year, all forecasts point to a normal crop. And we're already seeing actually the last few auctions have been down by about 13 to 15% prices versus same period last year. So we do expect probably the up 30% will be down 20%, and therefore the margins will come back. Market shares are strong. We've delivered volume growth in tea and overall a 12% top line in tea. So as tea prices drop, we do see margins coming back. That's number one. Number two was the impact of coffee. As coffee prices have dropped, we're carrying slightly higher priced inventory, but that also will stabilize. And as soon as that stabilizes, coffee prices, the coffee margins, unbranded coffee, that is, will roughly go back to where it was 2 years back. So therefore, for us, the critical piece is, as long as we know that these are the specific pieces pressurizing margins, and there is a line of sight in the next probably 1, if not 2 quarters for it to come back, we remain confident of getting margins back.
Interesting. Mr. D'Souza, I have a lot of follow-up questions with regards to everything that you said. But the first thing I wanted to understand, when you said that you've passed 70% of the inflation and absorbed 30%, have you taken price hikes this quarter? And if yes, what's the kind of range of price hikes that you've taken? Because the part of inflation being carried forward is also because you've already taken price hikes in the previous quarter as well.
Yeah, so most of the heavy lifting of the price increases happened between, I would say, Q2 to Q4 of last year. Q1 of this year, marginal changes. In fact, it was a mixed bag. There were some increases, there are some decreases, because as we see, again, tea is not, everything is not one quality. There are different qualities of teas which goes into different blends and prices move differently. Whatever we are seeing in the auctions, we are starting to translate. So we've taken some up, we've taken some down. Broadly, I would say minimal net movement for this quarter itself.
Okay, interesting. Okay, in terms of your core business growth, that has been good, but the growth business was lagged, and this is because of a one-off. Do you think this is only part and parcel of this quarter, or will it also be carried forward in Q2 or Q3?
So we've always guided for our growth businesses contributing to 30% of our top line and growing at 30%. Now, this quarter it was 28% contribution, but grew only at 7%. And that's for 2 or 3 very specific reasons, right? Sampan did grow 27%. So that is, moving on a very, very strong footing. Ready to drink beverages, we re-indexed pricing in Q2 of last year, end of Q1, Q2 of last year. Therefore, we're cycling higher prices from last year. We did deliver volume increase. It was up 3, but total value was down 13 because we corrected prices. And the +3 should have been far higher if it was not for the unseasonal rainfall. Now Q2 we expect to be normal weather, and if so, between Q2 and Q3 we should come to a 30% trajectory. Capital Foods and Organic India, which were our acquisitions, Organic India still was a 30% plus. Capital Foods was the one which was slightly lower for a couple of reasons. We had a bunch of issues in exports and imports, I would say. Exports because of supply chain issues internationally with the geopolitical issues around the Middle East. Imports, there are certain ingredients which we import for various food products which we started to face issues in imports, and we had to rejig the formulation. So that's number two. Number three was we had capacity issues, especially as we started to ramp up noodles. That is more or less now behind us, and we've started to move on a different trajectory. And lastly, in some specific distributors, we right-sized inventories to make sure that we are on a firm footing. So as you rightly said, this is one-off. And between Q2 and Q3, you will start seeing the trajectories come back in line with expectations.
Okay. In terms of tea and coffee both, tea, you said there's volume growth, there's also value growth when it comes to tea. Coffee has also seen a good growth, though on the back of a lower base as well. But just want to get a sense of competition there. Are you seeing some kind of market share losses when it comes to both tea and coffee? Because in the past few odd quarters, we've seen a lot of new companies getting into this space, be it startups or be it from the unlisted space. Any view there?
So coffee, actually, for India, my volume growth was 33% and my value growth was 67%. I don't have access to numbers from competitors so far, but I would dare say that we were right up there in terms of coffee growth. So I wouldn't worry too much about market share. As regards startups, etc., as quick commerce, e-commerce gains traction and business, the channels move between a GT and the new age channels of e-commerce, quick commerce, etc. You will see a lot of players coming in because they don't have to do the hard yards of building the GT distribution. But that said, ultimately the business basics have to play out. Brand equity, product quality, marketing, execution has to play off. And I wouldn't worry too much about it. I think we've got enough runway in terms of market share for us. We're still a very small player. We've got a huge runway. I wouldn't worry about competition. I think we need to get our execution buttoned up tightly.
Understood. Okay, one last question, Mr. D'Souza, before I let you go. International business has seen a growth of 9%. Constant currency was around 5-odd%. Just want to get a sense there. What's the outlook like, one thing? And do you think that the pricing interventions are still impacting that part of the business? And what is the expansion plan looking like?
So we've always guided international for being mid-single-digit top-line growth and being accretive to the India business. And I think they've delivered 5% constant currency, 9% total reported growth. And my EBIT margins are 14%, which is accretive to India. So international has come to the party. The most important thing in international is I think UK and Canada are on a strong wicket. UK, we have started spending behind building brand Tetley as well. In the US, now we've started to see very strong top-line growth. We saw a 12% top-line growth. 16% top-line growth and margins in line with expectations. As coffee prices settle, the margins will come back. And therefore, the better position that we land up in terms of market share, etc., will play to our advantage. So international, I would think broadly, we are where we should be. We need to accelerate from here on.
Thank you so much, for giving us all those insights and all the best for FY26. And thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you. Always a pleasure.